Welcome to StockMarketFunding.com. And what we're here to do today on Sunday morning at 8:17 a.m. Pacific Standard Time is to talk about the quarterly earnings. We have 4 of them per year. That's where all publicly traded companies report their earnings. And basically, Monday, April 12th, 2010, we start the earnings season off. And all of Wall Street and everyone will be focused on these earnings. And there, you can see here on earnings, they start before the opening bell. So before the stock market opens, you will have companies report earnings. And also after the close, that's when the stock markets close, you will have earnings that come out. Now, one thing about these earnings is either stocks move up on the good news that they may report, or if they don't report so well, then stocks are going to move down. And basically, in the SMF Pro Trading School, is that we have a section that's included in the 52-week school, and we also have an individual component that is dealt with stock fundamentals. Stock fundamentals, publicly traded companies, how earnings are traded, what is the gimmick about earnings, how do you trade, how do you know when to buy an equity, how do you know when expectations, there's, all kinds of list of many things that go involved with the earnings season and how you can make a fortune. I can't say it in 9 minutes on the tape, so bear with me, but what I can say is you can go to StockMarketFunding.com, and we do have a section on stock fundamental analysis training. And that training includes each quarter you get taken down the road. So if you wanted to sign up, that's going to cost you $5,000 per quarter. And what it's going to be is that I'm going to take you through all of the publicly traded companies that trade on the NYSE, the S&P 500, all of them, on all of the exchanges. And then I'm going to teach you about the fundamentals of the actual publicly traded company. I'm going to teach you about conference calls. I'm going to teach you about things that you've never done. I'm going to teach you how to do your homework. I'm going to teach you how to figure out when a stock drops $8 and the earnings report was really good, and when to be a buyer, or when the earnings are priced in, and looking from quarter to quarter to quarter, and then being able to use a system that SMF developed, a database system to follow these earnings, or your own very system of what you hold in your portfolio, so that you know when to be a seller, when expectations are built in, and why is it all the time that, perfect examples, last quarter, Intel reported the greatest quarter, last quarterly earnings in January 2010. Great quarter. Stock sold off $3 or $4. Why? Because it was already built in, and on a weekly basis on chart analysis, it was already overbought. And it was buy the rumor, sell the news to those earnings. And this is another aspect that you're going to learn. Google last quarter gave one of the best earnings report. This is Google right here. They're going to report again. They reported. They beat that bottom line big, and earnings came in line. They didn't guide the quarter down, and that's another thing. Companies give upside guidance. Companies give downside guidance. And companies do lots of things. And, knowing how to go to their website, replay the conference call, understanding, quote, understanding the analyst questions on the call. And we will train you on what analysts ask questions for on the call while you're listening. They ask very specific questions to write the next morning's report as to, when the analyst on the call, whether it's a conference call in the morning or a conference call after the close, after the report, is that they're going to write a report, such as an upgrade, such as a downgrade, or such as a neutral, or what they think what that publicly traded company's business model looks forward looking. and where they may go, and do they take their price targets higher? Do they take their price targets lower? And that's the analyst community role. And look, that doesn't mean that these analysts are right by any stretch of the imagination. You're going to have to be taught here at Stock Market Funding where those earnings expectations are going into the actual report. So if I bought a stock, let's say I bought Google at $480 and I'm way up here at 560s, 570, and if the good news is priced in, then I'm going to be selling into the good news. And you're going to have to know where the earnings trough is. And the textbook stuff that they teach people about, look at, that does not apply here at Stock Market Funding. What does apply here is where the wholesale value or the extreme retail value of the earnings are in the publicly traded company in the very short term. And there's a lot that goes into these earnings. I can't tell you in this very short tape. But we are going into quarterly earnings, and we're going to be looking at Intel again, where Intel is priced. It's about right back where it was in its last quarterly earnings, where it gapped up to 22.90 and sold off in after hours. LLTC, semiconductors have done better, we know. But one thing that all eyes are going to be on for us is JP Morgan, JB Hunt, that's in the trucking sector. This is financial. This is in the trucking transports. Yum Brands is in the food. We're going to be really paying a lot of attention to that one. And we're going to be paying attention to Google, which is an internet company, ISRG, which sells robotic surgery equipment to hospitals around the world, as we're going to take a look at where the pricing is going into the reports. We're also going to go back and look at what their last guidances were. We're going to look and see exactly where these companies are going into this next quarter. Granted that the stimulants in the economy have worked well, people have leveraged inventories well. People have been able to sell, people have been able to reduce employee cost, and all of these are contributing factors that go into earnings. One of the things about the healthcare bill, though, there's a lot of blue chip companies that are taking one-time charge-offs right now. And that's going to show on the bottom line in some of these earnings moving forward. And so does Joe Blow or the public really understand all of it? I don't think so. Look, the majority of the crowd, there is a system and a mechanism to earnings. And the system and mechanism that we use works versus where everyone sits around and talks about the old traditional way. I don't find that the proactive way. I find that having a system that works and has proven itself to work over many years, such as we have, that is where you want to be, and that's how you want to be trained if you're going to be a public trader or public investor. SMF are pro traders. That's a little bit different than those other two that I just mentioned. So basically, we are going to be doing our homework. There's so much about earnings season that people are going to learn, that the people that are in the SMF Pro Trading School, we don't charge them additionally. We incorporate it in their overall cost of the 12-month school, which added about a $20,000 value, considering that if you were to call me today, you will pay $5,000 to go through the whole quarter of all publicly traded companies on the exchange with earnings and or your portfolio as to what a plan, and even that's a very cheap price. So basically there's lots of advantages of being in the SMF Pro Trader School when you start looking at your cost and your professionalism that you're being taught. You're being taught many things. So I'm going to stop the tape for now.